Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis, and today we are going to be talking about Ripple and XRP. So sit back, relax, and before we fully jump on into this video, I do just want to ask guys to please leave a like on this video. It does help the channel grow immensely, and of course I always do greatly appreciate it. Now with that being said, let's just dive in and let's talk about a few things. So overall, the structure behind crypto right now is a little bit, worrisome for most individuals. I don't believe that this is worrisome at all. I think a lot of these major drops are very, very imperative for us to really kind of take, a hold on what is happening within this market, capitalize on it, and utilize individuals' fears as a massive buy signal. I've always said when you look at this market and you see everyone panicking, being fearful, saying it's all over, that's the time where you really kind of want to take a step back, go into the third person, look at the macro view, and really determine if this market actually looks bearish right now. Think about it like this, right? When we look at crypto and stocks, what is the main driver of success on them? Well, all I have to do is tell you guys one example. Go back to March of 2020, right? When we seen the crash of crypto, and then we seen the economic downfall within the US dollar, what happened? Crypto and stocks went parabolic. Now let's address this and let's talk about it. So first off, due to inflation, a US bank savings account would now have on average a negative 8.5% year over year return. Pretty significant, right? Except the idea here is going off of that 8.5% year over year return, aka inflation rate. When we look at this, okay, inflation's much larger than 8.5. Now, we are seeing a lot of news within this actually. First off, we did see here, the White House says it expects inflation to be extraordinarily elevated in a new report. Pretty interesting comparing it to, what we have been hearing. Inflation's, transitory. Now we're actually seeing inflation being a big, serious issue. Pretty funny, right? And we do see here the Biden administration is bracing for the Labor Department's Consumer Price Index report to show that inflation is extraordinarily elevated. The Consumer Price Index, or CPI, is one of Wall Street's favorite ways to measure inflation. The CPI reading for March 2022 is due out Tuesday morning. We expect March CPI headline inflation to be extraordinarily elevated due to Putin's price hike. Blame it on that. Don't blame it on the printing at all. The February reading showed the benchmark index rose 7.9% over the last 12 months, the highest level since 1982. Don't worry, everything's okay. Markets are stable. There's no concern at all. We should not be worried at all, especially when, you're looking at rent and gas prices up 50%, but the inflation rate is only 8.5%, right? It's funny that they are continuing to blanket this and really kind of hide away from the facts. Inflation is much larger than 7.9% or even 8.5%. Also, we just hear brace for another supply chain shock. More than 90% of Shanghai truck capacity is out of service. Limited truck access to Shanghai port terminals is causing shipping containers to pile up and slowing ship transfers, freight waves. Container vessel operators are preparing to divert refrigerated containers destined for Shanghai to other ports because the area to plug into electric power is full of cargo that trucks can't retrieve. Okay. So let's take a step back. Let's address a few things here. So first off, right, when we look at things happening, inflation is obviously much higher. We've been addressing this. We've been talking about it as well. Now, I don't want to concern you guys and say, hey, we're going to be seeing a massive downtrend within the markets. No, I'm actually going to be talking about why this, type of stuff is actually beneficial for risk on assets and why we are actually fairly positioned well for the future of this. So obviously, yes, the US dollar right now is at a very massive height. We're actually going to be addressing that. We're going to be talking about it, and then we're going to kind of compare and contrast it to, crypto and really kind of talk about where we are really positioned, within ourselves. Now, when we talk about the current market right now, we are seeing a lot of talks around this new variant with COVID and stuff like this. I just want to reiterate the idea that when we talk about stuff like this, when we talk about inflation, they need things to blame on inflation. It's not the idea that they have been printing and printing and printing, right? The printers have not stopped at all. In the last 2 years alone, 80% of the US dollar in, circulation has been printed, but that's not a problem at all. This is definitely due to Putin's, price hike and things like that, right? Again, we are seeing things needed to come out for an excuse. Again, I do believe that this new COVID, variant is most likely going to be utilized as a hedge and say, hey, we're blaming things on this. We need to, make things look a little bit better on paper. That's most likely going to be the thing. But I want you guys to understand that within stocks and crypto, we will see a massive melt up. Shout out to David Hunter for this. We will see a massive melt up just ahead, likely to be the biggest, steepest rally in the post-World War II era, and will be a broad rally with both growth and value. Large and small caps participating commodities, industries, or industrial, tech, including FAANG, semis, and ARC, autos, airlines, steel, financials, and miners will all play. The best part about this is I want you guys to understand that this is before a massive meltdown. The reason that we are looking at this, okay, is that this will lead us to the final leg. This will lead us to the wave 5 on Bitcoin. This will lead us to the alt season. Now, what happens after is the meltdown of the markets. This is where we lead to a recession or even, a depression. The reason why I talk about this and the reason why I kind of warn you guys ahead is that we need to position ourselves to the point where we can prepare for the imminent future. And the future is the idea that inflation is far higher than what they are expecting. When we talk about the U.S. economy currently, it is 100% unstable. They're trying to print a better picture for individuals out there so that they can kind of prop the markets up for as long as they possibly can. We've seen this happen back in 2008 as well. Now, let's move on and let's talk about a few things here. One, okay, let's talk about things happening economically that are, being affected for individuals that possibly might watch my videos. I know myself am affected by a lot of this. Imagine being a young family right now. Rent for a 2-bedroom home went up 22% in the last year. The apartment that I actually rent right now, when I look back on the prices compared to now, the prices have been up, over 50% plus. But we do see here, imagine being retired with 8.5% inflation. Your purchasing power has been significantly diminished. Imagine your car gives out today. Used cars are up 35% from last year, and new cars, just had the biggest inflation jump ever. Chances are you are among the Americans hit hard by this record inflation. We need real action from Biden, and we need it soon. Honestly, when we talk about the market currently, we are at crisis level now. The president of the Texas International Produce Association told me, saying $30 million in produce has already been held up at the border because of inspections ordered by Greg Abbott. And when we talk about this, if this issue persists, this will cause increased prices. We're going to be seeing a massive increase of prices throughout the entire market of things. We're going to be seeing a massive increase in prices with produce, gas, utilities. Everything is going up in price. I see it every single day. I just went grocery shopping the other day for $100. I barely got anything. I remember when $100 at the grocery store used to get you, at least a filled cart, right? Things are, very different right now. And I do believe that the economy is at a crisis level, and we are going to march evidently more and more towards that level. Now, let's talk about a few things. So I've been addressing the dollar for the last couple, weeks now. And obviously, I do, a daily update on this. I actually update everyone on the structure of the US dollar almost every single day. Now, let's address a few things. In fact, let me actually open up another chart. We're going to be addressing Bitcoin here. I know that this is an XRP video, but the reason why I'm showing you guys Bitcoin is I just want to show you guys what happens within the markets when something like this actually does happen. And we're going to go to the weekly view, and we're going to go back in time, kind of just ignore the fib levels and stuff like this that I have on the chart over here. We're going to go on the weekly view, and I'm actually going to go on the weekly view for the dollar index as well. So let's actually look at this real quick and address a few things. So ultimately speaking, I do want to go back to March of 2020, and we could go back to March of 2020 pretty easily on Bitcoin because, of course, we have that printed on the chart right here. So during this time, COVID was a big thing. It was the first, sort of big event that happened in a very long time, and it did cause a massive economic downfall. Of course, we did bounce off of the 200-day EMA, which is pretty funny. But we go back to the dollar here, and we go back to March of 2020, and we do see this massive rise in value for the dollar. A lot of individuals were, uncertain about risk on assets. They thought that a stock market collapse was going to happen. They pulled their money out, and they put it into the dollar. They were just hodling dollars, right? Now, this caused a massive surge in value. But what ended up happening after was a major, sort of interest going to risk on assets. And a lot of individuals, thought that it was better to hedge against things by buying things like stocks and crypto. So what ended up happening was the dollar went into a massive bear market. In fact, it went from March of 2020 all the way to around January in terms of that bottoming structure. Now, during this time, I don't need to really kind of reiterate what happened. Of course, you guys are probably all aware, especially if you were during this time in crypto. But ever since that March of 2020 drop, Bitcoin went on a massive rally. And in fact, we topped out around April before having that nice correction. Now, this was April of 2021. Again, April of 2021. Here you guys have it. So it was around this time here where the dollar was still kind of falling, but then it started to pick up some traction around June of 2021 and started that nice little rally. Now, of course, we had a secondary rally on Bitcoin, as you guys do see from July. It started in July, and we really kind of rallied until around November. Now, again, during November, we weren't really at some high points on the dollar. We were starting to break out, as you guys do see off of that bottoming structure. We started to break above the 382. Now, I would say things got pretty bad around this time of November into, December, where we were kind of just trading sideways, but really started to pick up some speed here. Now, this did cause a lot of shift from, of course, risk on assets into, again, holding dollars, hence why we did see a lot of collapsing happening within the crypto structure from November to around now. Now, what is the difference here, and what are we basically seeing? Are we going to be seeing a repeat of this time frame? Well, ultimately, when we look at the current economical structure of the U.S., guess what? Inflation and these markets are leading to a massive collapsing event, which will most likely cause a major surge throughout crypto and stocks. I'm going to be watching this closely, but also I want to just show you guys that the 10-year yield itself was incredible in terms of, depicting on what is going to be happening. I showed you guys the major indices earlier today in my overall view on the current markets. When we look at this, as you guys do see, they were pretty red today. Of course, I'm watching these closely, but a lot of the, uncertainty around the market is the dollar. Individuals are kind of concerned about the dollar, so they're kind of moving their money out of risk on assets and hodling their dollar. Now, I do believe that the dollar will evidently more so clearly get back to the 2018 lows, which is around this current structure out here at about 88.42. I'm watching that level closely for a major retest. I do believe that we get there. Now, I also do want to show you guys real quick in terms of the bonds, the 10-year yield. Now, this I've been addressing multiple times here and there throughout the weeks. I've been kind of showing you guys why this is a very important chart. When we look at this, look at the strength of the 10-year yield. Again, here we have March of 2020. Again, I would say the buying interest within risk on assets collapsed greatly. In fact, we've seen this kind of spike from September of 2019 to around December of 2019, which caused a little bit of a surge on Bitcoin. We went to like around, roughly a nice little high of almost $10,000. But we had that collapsing structure in March of 2020. This is where a lot of the, buying power or buying interest around risk on assets dropped greatly. But then this went on a massive rally, and we kind of topped around, March of 2021, which again, this is where a lot of the risk off started. This is where interest kind of dropped out. The 10-year yield is a very good structure to really watch for, especially when you are looking at interest within risk on assets. But as you guys do see, this is continuing that nice breakout event, which means a lot of interest is still around risk on assets right now, which tells me that currently the market is not having a fall in the idea of individuals, being, sort of, I would say, kind of ignoring risk on assets. There's still a lot of interest around these areas. It's just the problem is the dollar. Individuals are kind of worried about this. And trust me, it does call for concern. But when you look at the economical viewpoints, this is putting a better picture for us. This tells me that we are going to see a massive dropping point on the dollar eventually. We don't know when that's going to be. We should be seeing a dropping point very, very soon, though, especially considering the current level that the dollar is at, comparing it back to the March of 2020. Are we going to see a surge all the way up to that 102.9097 area? It's possible. Or are we going to see a rejection at around this point that we've seen during April of 2020? Very possible as well. But I do believe that the structure that I have on the chart is going to play out eventually, which will lead us back down to these levels at around possibly the October timeframe to have that fall topping structure similar to 2017, 2018 in terms of the bull run. Now, after this does happen, I do believe a massive crash will happen. This is why I do say make sure you are taking your profit when we do hit those highs. Of course, my highs on XRP have always been around that $10 to $15 range, off of course, the fib levels from the all-time highs to the all-time lows of the March of 2020 dropping points. Of course, my targets have always been $10 to $15, and I know everyone is probably going to say I wouldn't feel safe selling XRP at all during those levels. Trust me, if a settlement does happen, yes, those targets will be much higher. I did outline this in my exit plan on my website, NCashOfficial.com. If you guys do want to get my exit plans and stuff like that, you guys are more than welcome to go check out NCashOfficial.com. The Ultimate Crusader Trading Bundle Pack is the best deal for your buck, as it does include everything on the website, as well as all future content for free. This is where I will be uploading a lot of my plans for, of course, preparing for that economical downturn in the markets. If you guys do want to go check that out, you guys are more than welcome to. Links are down in the description below, as in the comments below. But for those individuals that don't want to pay for anything, I also outline a lot of plans within my Discord, which is completely free. I also post a ton of charts in there. I post, buy targets, sell targets, stuff like that. That's completely free. It's down in the description below, as well as in the comments below. And I do post a ton of content on my Twitter as well. So if you guys do want to go check that out, links are down in the description below, as well as in the comments below. But I do hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on. If you guys don't want free content, you guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day or a beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.